All right, good evening, everyone. Welcome to the Beyonder Holdings Outdoor Hospitality Sun and Fun webinar. Thank you for taking time out of your evenings to spend with us. I would like to spend the next hour telling you a little bit about our company, what we do, and of course, what opportunity we have. We know some of you have been here before. Welcome back. So many of our trusted investors are on with us tonight, so thank you so much for coming back with us. Some of you are new. Welcome. We are excited to get to know you and teach you a little bit about what it is we do. Before we get started, I'd like to take some time to introduce a couple of members of our team who are on here with us tonight. I'm going to pass the mic around for just a brief introduction. So, Don, if I could start with you.
Yeah, hey everybody. My name is Don Spafford. I'm part of the team here with Beyonder. I live in Idaho Falls, Idaho. I'm primarily focusing on the investor relations side of things to help find people like you to come and want to invest with us. And you can easily find me. I'm very active on LinkedIn and other social media and podcasting. So I'm doing as best I can to get out there to find you, so you can find us and learn about this exciting investment opportunities here.
Perfect. Thank you, Don. Brad, do you mind jumping on and giving a quick introduction?
Sure. Hey, everybody. My name is Bradley Claudianos. I'm on the acquisitions team here at Beyonder Holdings. Just spending my time looking for great off-market opportunities. Yeah, really grateful to have you all with us today.
Thanks, Brad. And Ramesh, good evening.
Yeah, good evening, everyone. Thank you for all taking time to join this webinar this evening. My name is Ramesh Nachiepan. I'm part of the investor relations team at Beyonder Holdings. We just want to, find out, using a lot of off-market opportunities, like Bradley says, all the time, and look on the lookout, so that we can provide you the best, excellent opportunities out there with great returns and ROI for your investments. Thank you, everyone. Yeah.
All right, thank you, Ramesh. And Robert, if you don't mind me putting you on the spot, Robert Earl from our operations team is with us tonight as well.
So Robert Earl with Beyonder Camps. I'm the regional manager, basically the head coach for our general managers at our different sites. My wife and I are full-time RVers ourselves. So over the last 2 years, we've been in 29 states. And have our plans for 2024 to visit our parks that we currently have in the portfolio and the other ones that we end up adding.
Perfect. Thank you, Robert. And for those of you who don't know me, I'm Adam Lundy. I'm one of the founding partners of Beyonder. Justin Hoggett is my partner who also founded with me. So let's get the party started. I want to lead off tonight, as we've done the last couple of these, with a quick economic update. Just share some of the things I'm seeing in our market, and of course, just talk about how that could translate into the future ahead for us in outdoor hospitality. So this is some recent data I pulled, and I think it's worth sharing. I think anybody, whether you're investing in real estate or any other assets, it's important to understand what's happening. But this is some great new information from both Goldman Sachs and the Fed, expecting GDP growth in the coming quarter. Goldman Sachs is projecting 4.6% GDP growth. Atlanta Fed's a little more optimistic, projecting 5.4%. So good news for our economy, which has been on a little bit of a slowdown over the past year. The US dollar is also up a little bit too in the index compared to other large world currencies, which is good news because they've been trending down. And then, of course, I think more importantly is just understanding what's happening with the Fed as it comes to rate hikes. That's been certainly a big factor in impacting us on our acquisitions front. 10-year Treasury today was at 4.75, I believe, and they're actually expecting that to be down sub 4% by the end of the year. So that would be great news for stimulating growth through lending as we go into the coming years. It's certainly been a big challenge we've dealt with on the real estate acquisition side, is getting good debt, and of course with higher interest rates that has been a factor. So lots of good news, I think, pointing to us, maybe potentially not being on a quick upward trajectory, but at least, if nothing, not being on a downward trajectory anymore economically. So that's just kind of a high-level overview. Ramesh, did you have anything? I'm kind of putting you on a spot that you wanted to add to that you're seeing. I know Ramesh is a student of the economy as well, too.
Thanks, Adam. I think I'm kind of on the same path as you just mentioned. Like, they are projecting a Q3 for 5% GDP growth. which is also asking the Fed to go and do probably another quarter points before the end of the year. So Fed is going to hike rates depending on where we are on the Q3 GDPs.
Right. So we'll see what happens, but signs are pointing to things maybe starting to turn around here in the near future. But let's talk a little bit about why we're here tonight, which is outdoor hospitality, RV camping. Depending on how you want to look at it, this is our industry we specialize in. Out of all the asset classes, this is the one we chose to focus on. And for those of you who are new to this, I'm excited to share it with you. RV camping has been on the rise for some time. There's a great saying I've heard recently that COVID accelerated all trends. 2020, it was no doubt a big boom for camping. People were forced to get outside and to alter their travel plans. International travel wasn't an option. A lot of domestic travel was even inhibited as well too. So a lot of people took to the road buying RVs, taking RVs out. It was a great year for RV sales. It was a great year for RV campgrounds. But this wasn't a trend that was isolated to just that period of time. In fact, historically, RV camping was already on a pretty swift rise from 2016 on up. That trend was just accelerated by 2020. We had a huge boom in new campers join the space. We're over 93 million users in the space right now, yet it's still a relatively small group of privately held campgrounds. Of course, I'm excluding state parks, national parks, and municipal campgrounds, but just looking at privately held campgrounds, they're just over 16,000 in the nation. But this is a $9 billion market cap industry. So a lot of potential here. This is also an industry that has not yet really been modernized. A lot of the owners of these properties are mom and pop owners. There's still a massive amount of meat left on the bone in this space. We're going to talk a little bit more about that in depth as we go through this. I'm excited to share it with you. So we're looking at three different groups of people who are using the space. And I want to start, of course, at the user base and work backwards from there. A lot of folks, if you aren't already in the camping space, you picture, grandma and grandpa who are retired, living in their RV, spending a lot of time on the road. And that's the picture a lot of people have. But I'm happy to share that this is not something that's going to die with that generation, because right now, the largest owner group of RVs is the Gen Z, Gen Y mix. In fact, just a couple of years ago, 38% of RVs were held by millennials. The trend now is that Gen Y and Gen Z hold over 50% of all RVs on the road. So this is something that is being taken up by those younger adults, those younger families who are looking for fun things to do while they're working on the road. They're looking for great Wi-Fi, good facilities, fun amenities, good activities that they can send their kids off to do. And this is what got us into the space. When we were buying campgrounds, we were looking at this not only from a real estate acquisition standpoint, but also a management operation standpoint, because that's an important part of our model, is not just buying campgrounds, but also optimizing these things, making these great experiences, and in doing so, making them more profitable and worth more in the long run. I've mentioned, of course, that the growing trend that we were already seeing in the RV space. And in fact, you can see the camping households trend was on its way up from 2014, growing pretty substantially with that hockey stick curve in 2020. Like I mentioned, not a fluke, not something that just happened out of the blue in 2020 and is going to head back down anytime soon. We've maybe normalized on our growth trajectory going forward, but we had a nice substantial bump in 2020 of people who joined the space in using campgrounds. As I mentioned, of course, by generation, if you look at those gray charts at the bottom, you can see those darker colored bars are the younger generation. So Gen Z on that dark bar in the bottom, millennials above that. As you can see, 70% of campers total, and of course, this is not RV owners like I mentioned before, but 70% of campers are millennials and Gen Z. That's so we are talking the overwhelming majority of people, which is why when we developed Beyonder Camp, our management model, we made our focus avatar on the younger families and the younger working adults, because that is going to be the majority of our user base. And the great news is, when we're talking just from an operations standpoint, putting the amenities in, putting the services in that those users are going to want, ultimately are going to attract the Gen Xers, the baby boomers, because everybody likes clean bathrooms, good Wi-Fi, and fun things to do in a campground. But they're especially important for those younger users, especially with families who are coming through. Big consideration we talked a little bit about the economy, but just while I'm sharing data up here, and I promise I'm not going to bore you with charts and bar graphs from this point going forward, but it's just to talk about the economic downturn we've experienced over the past year. And a couple of things we've noticed, whether it was the fuel prices in 2022 or the continued inflation into 2023 that changed the value of the dollar, is it really didn't hinder the RV camping space as much. Fuel prices, what we saw is we had change in migration patterns. Rather than maybe traveling cross country, we had more folks who were traveling no more than one state line. So we were able to survive fuel price changes. As we've moved into this year, airline tickets have gone up. That's actually pushed more people into camping because airline travel has become less accessible for people. But taking a trip to a campground that's a couple hours away is still attainable for a lot of people. And folks surveyed have mentioned, of course, that they would, as the economy has slid into this downturn, that they're going to use RV for more travel rather than taking other trips. And they would change their travel plans to RV in more cases than not. Or wouldn't change away from RV camping plans. So really, this has proven itself in past trends as well to be a very recession-resistant asset, something that people are going to do and is attainable by most demographics of users. So when we're looking at this through a few different lenses, of course, I mentioned we're going to start with the camper and work backwards. We've already analyzed some of the things that are missing in the space. We love KOA, even though they're a direct competitor of ours. We love the model they've built. They have built a very dependable model. We equate them to the McDonald's of the campground industry. You know what you're going to get when you go to a KOA campground. Your expectations will be met that you're going to have an up-to-date, clean, and well-maintained campground. But it's up to the individual owner, because they're a franchisor, to decide what level of amenity, what level of activity they're going to put in. And a lot of those campgrounds are frankly boring. Some of them stand out above the rest, but a lot of them you'll go to and they don't have a lot to do. When we were building a management model, and this is an important part of Beyonder Holdings, is our management model. What Robert leads with our team every single day is making sure that every one of our properties is consistent in an activity schedule, an amenity set. Having those amenities like Wi-Fi, like I mentioned, that are going to be important for those younger families that are working. There's a lot that we have to consider with that. So we're looking at this also too. I mentioned having those younger users, those Gen Y, Gen Z, they're going to want to make online reservations. They would rather drive past your campground another 50 miles down the road to somebody who has online reservations and pick up the phone and call somebody. So these are all the things we look at when we look at what our target demographic is considering when they visit a campground. So we're looking at this from the operational standpoint. Now let's go to the next window we look at this through, which is the campground owner, because we are buying campgrounds from existing owners at this point and the challenges they're dealing with. I already mentioned this is a predominantly mom and pop industry. In fact, I don't have data on this, but just from my own experience, and I'm sure Brad can agree with me on this here too, from the campground owners he speaks with, we're still about 80 to 85% mom and pop in this business. We have very few institutional owners in the space. And a lot of mom and pops, to their credit, they're great at providing a killer guest experience, being hospitable, but they're not always strong business owners. They don't always have a strong, ability to budget and plan or manage finance. And what often happens is they get run over in their campgrounds. They've got infrastructure that's aging. They've got amenities that are out of date. They're having trouble keeping up with the times. There's a lot of challenge that comes with it. They've been burnt a few times on employees, so they take on all the jobs themselves. They're fried, they're burnt out, and that's where somebody like Brad or Tim from our acquisitions team comes in and helps save the day for them. And this is where we really focus on the acquisitions front, is getting in front of opportunities that other operators in the space aren't seeing, and that's off-market opportunities. Brokers in our space do a great job of getting their clients top dollar for their properties, and that's as brokers should do. But frankly, those don't serve our model well when we have properties that we're buying above market value. So, I'm proud to say that most of our properties we have purchased have been off market, and most of those properties, when appraised, we've purchased below the appraised value. So, that's an advantage of us building relationships with these campground owners. Brad's got some that he's been working with for over a year now, talking with the same people, just nurturing the relationship along until they're ready to sell. And oftentimes this is the case. They're just having trouble keeping up with the times. They've slipped behind. And of course, that creates for us opportunity. So talk a little bit about where we are today, and then we're going to shift into what our strategy is and how we operate. So Beyonder has been in business since 2020 is when the end of 2020 is about the time the vision was cast and the brand was forged. 2021 is when we really got operational. Through 2022, we really grew. And then, of course, we've had a little bit of a slowdown this year. Some of that's just been caused by some economic conditions, and some of it has also been our own conservative principles that we operate on, and buying the right properties, being very cautious about our financials. So we are presently at 6 properties owned in the portfolio. 2 of those are in Iowa, one's in Missouri, one's in Louisiana, one in Indiana, another in Alabama. Last year, we launched the Outdoor Hospitality Sun and Fund, which actually houses the property in Alabama and the property in Louisiana. We'll share some details on those soon, since that's part of the reason you're here tonight. If you're new to us and you'd like to learn more about our properties, you can head to beyondercamp.com. So Beyonder Camp is our public-facing brand. It's our management model. So if somebody is looking for a Beyonder campground, that's where they go to find them. That's where they go to reserve their site. So feel free to check that out if you want to learn more about the actual campgrounds that we have in our holdings. We presently have 3 properties that are under LOI, one new development that's under contract. Of those ones that are under LOI, we've got one that's probably closer than the others to going under contract. We'll be able to share more on in the near future. But of course, some of you, we don't yet have in our investor portal. We do have an NDA that's required to be signed before we share any of that info. So tonight I won't be sharing on any current opportunities. But that's stresses the importance of getting into our investor portal. I'll share the address later in the presentation, but at investors.beyondercamp.com, if you're not already in, you can sign up for the portal, and that's where you get in front of new deals as they come out. So our goal as a company, we are still growth focused. We're planning on being growth focused for a number of years because we are working toward 100 properties in the portfolio, and that's just properties we own. In the process, we've happened to build a really great management model that Robert's helping us develop even further. And we're going to be really focused on growing our management model into other campgrounds, which will not only, of course, help build the brand and help support all the other properties, but also helps to support our acquisitions funnel as well, too, as those owners potentially transition out of ownership. All right, let's talk a little bit about what we're looking for in a property and what opportunities exist for us. So we're typically looking for properties that need improvements to be made to them. This is opportunity that will generate revenue through either ability to increase daily rates, the ability to increase rental and retail revenue. We're looking for properties that have room to expand, so extra acreage that we can build more sites on. If it's on water, the opportunity to add a marina to the property. There are lots of opportunities we can do to expand what we're offering. We're looking for properties that have operational inefficiencies that we can improve. And some of that we can do to almost any property just because we have some economies of scale in our management and operation model, where we can split expenses across a number of properties. For example, accounting and bookkeeping. We don't have to have a full-time person per property. We can share those expenses from the corporate level down. So there are a lot of little things we can do to improve, but our goal is to increase the revenue by at least 50% in a 3 to 5 year period, if not more. Some of the expansion opportunities we have give us the ability to go up to even 100% sometimes increase in revenue. But these are the things we're looking for when we're buying a property. Just to share a few examples of a few properties in our portfolio, the opportunities that have arisen and what we're working on right now. Beyonder Marina at Stair Creek, I know some people on the call here tonight are investors in that property. Since we've taken ownership of it, we've added 44 new slips to the marina. It started as 285 slips. It's now almost 330. And we're actually in the process. We just got our site plans approved for new RV sites on the property as well, too. So we're going to be expanding the RV sites. And that's only... those are just the main revenue drivers. We've also added a new store to the property, added a new rental boat fleet, a lot of other little improvements. We have very comprehensive business plans when we go into these properties. One of the newest properties, which is in the fund, actually, it is our newest property, is Beyonder Getaway at Wheeler Lake. This is just outside of Huntsville, Alabama. So if you do choose to invest in the Outdoor Hospitality Sun and Fund, you will be an owner of this property. This property, beautiful, absolute gem of a property. We have an opportunity on over 100 acres to add, just in our first phase, looking at 100 new RV sites and 30 boat slips out on the water, in addition to improving some other parts of the operation. But this is already an absolutely outstanding property. I'm going to share more details on it on a later slide with you, just so you can understand what is currently in the fund. And then, of course, the final one I want to share with you is also in the fund. This is Beyonder Resort Cajun Moon. This was the fund's first property. This is near Lake Charles, Louisiana. Really beautiful property. Nice set of amenities in place. This one here didn't have any opportunity on its existing land to expand. We've actually got an option right now. It's an off-market option on about 3.5 acres of land adjacent to the property that we can expand on. We're currently surveying whether our septic system can adequately handle that expansion, and just a couple other factors that we're going to need to consider before we go to zoning. We have a great relationship with the owner of that land, so we don't even actually have to put any money on it until we get the entitlements in place we need. So that's something we are actively working on right now to expand that property, which is in the Outdoor Hospitality Sun Fund. So Don, can I hand it to you to cover some of what we do after an acquisition?
Sure thing. Yeah. Well, thanks for covering all that stuff up to this point, Adam. But yeah, after we take over a property, it's not just a turnkey. I mean, this could be very easily be a turnkey business. These properties operate very well as is, but as Adam said, we want to do things to make them even better, to provide higher returns. So part of that is we're going to target this 40% operating profit. So with some of those expansion plans, those capital expenditures to expand more RV sites, build on more amenities, the marinas, all those kind of things, just make the property bigger and better and nicer. That's going to increase the overall profitability of that property, and in turn, of course, give back higher returns back to the investors. A big part of what we're doing, like as Adam mentioned, with the mom and pop issues with staffing, we want to get proper staff in place, the right number of people, and get them properly trained, which is what our man here, Robert, has been doing an excellent job of that, to get people in line and know what to expect with the Beyonder brand and what we expect from them and for the properties and for our guest experiences. So that's very, very essential. I mean, this business depends on those guests leaving great reviews to give people to come more, other people to come to those properties because of those reviews. So we want to provide the best guest experience possible to keep everybody coming back and keeping it filled. Of course, part of that is, besides these expenditures on the expansion and things like that, is also those tech operating platforms, get the online reservation systems, the point of sale systems, all those things in place to make it easier for the managers and staff to be able to operate and function that property as good as possible and as easy as possible, making it a smooth experience for the guests that come and stay there. They want to make those reservations, want to order some food or whatever it may be. They want to order from their site and have it delivered. Wood for their fires, things like that. So all those things make it much simpler and smoother and a fun place to be. A big thing, of course, we want to make sure we are monitoring the budgets, the cash flows. Our internal CFO, Rick, he does a good job of checking those daily. If we look for any odd occurrences, some big expense or something going on that's happening at a property, we can get to it as soon as possible to take care of it before it becomes a problem. And this is actually something we addressed in our Q2 report as well. But that's very essential. Again, the mom and pop, oftentimes they're doing so much going on that it's hard to keep track of all those things to even know what's happening with their business. Many of them, you'll be surprised, don't even really know what numbers they have. It's hard for them even get together the financials to give us to do a full-on review. Again, a big thing is just that Beyonder branding. When we take over a property, it may have been mom and pop ABC for the last 50 years. It's now under Beyonder flag. The Beyonder name was on that campground. We rename it, rebrand it. That way, people when that maybe have been in the area, they've been to that campground before, they might be like, what, that mom and pop ABC wasn't great, but hey, now it's a new property, new owners. Let's go check it out, see what they got that's new and cool. So we want to revitalize that property with a new name as well. And with RV campgrounds, it's very different than multifamily or other asset classes, in that the value add is not just improving the property, changing carpets and paint. This is a big part of what we do is expansion. We want to add on more RV sites, more boat slips, things like that that can bring more people in there. If anybody here has ever been to a campground, especially like on a holiday weekend, for example, they're just packed. There's really no spaces available. So there's such demand that there is a need for more spaces, people to come in there and have more availability to, therefore, again, increase the revenue of the property. And we often want to add some glamping options, tiny homes, cabins, possibly domes, or other unique glamping options that may fit that location. Just new things will bring people in there that may not even have an RV. They can't, pull in with an RV or trailer, but hey, they want to come out there and go play in the lake and go to a concert and do these other things. And hey, while they're here, we'll just stay at the rent a cabin or something else to stay on site. So we want to make sure we have something available for everybody. Again, we talked about adding marinas and expanding those boat slips. That's a big part of the business. If you're on a lake or a river that has those needs for boating, jet skiing, water skiing, all those kind of water sports. People when they pull into a campground, they want to make sure it's nice and clean. You don't want to pull into a campground and feel like you're in this trashy dump. If it's not clean and picked up, you don't want to stay there. So you want to have good, nice places that are have this nice curb appeal, versus a dirt pad where you can just pull on with nothing to hook up to. You want to have that nice concrete pad, private patio area, maybe a little private dog run area. All these little things just make it nice and clean for people who want to come there. A big part of the value add is also just the infrastructure. As Adam mentioned, these mom and pop places may have the same things they've been using for the last 50 years, not really any improvements on the pedestals at each site where people can plug into. We want to make sure we have those updated and current to be able to handle all the electric vehicles coming through. That's a big thing. If people have an electric truck or an RV, you're wanting to pull into place, you're going to check, can it handle an electric plugins? If not, they're going to go to the next one that does. So you're going to make sure we are ahead of that curve and have those availabilities for people that are looking for that, which is obviously happening. We can't avoid it. All cars are going to be RV in the next 10 years or so. So I'm sorry, are going to be electric next 10 years. And then so we want to make sure we can handle all that before it becomes a bottleneck. And getting the signage out there for people to see us. People that be traveling by the road may not have even made a reservation, but hey, there's a place here. Let's pull over and stop. Especially if they see the Beyonder name and know the brand, they'll stop there and check it out because they love Beyonder. And the other big thing of the value add is the amenities. We want to make these places just fun and exciting to want to come to. If you don't have those amenities, as we talked about before, people don't want to go. It's not just plain boring camping. They want to come here because they want to have fun. They want to have activities and pools, lazy rivers, aqua parks, all these fun things to just come out and hang out and have fun. Some of our properties even have concert venues. People that come in there for a concert and just to get away and enjoy it. This is their vacation for many people. Instead of going to Disney World or something else, they're going to go out a couple hours, save some money versus those other big expense places, and just have a great time, enjoy the weekend, and then go back home. Right. We talked about it a little bit before, is that the online reservation system is pretty much key to this business. Not only does it make it convenient for people to make those reservations and to find us online, but it's also has that built-in dynamic pricing where those prices will change and fluctuate based on the occupancy and the demand for that certain weekend or holiday event going on. Without that in place, if it's just taking those mom and pop phone call reservations, you're missing out on a big chunk of money if you're not able to handle all those intricacies of the variance of prices. Having in-house centralized accounting and HR, again, going back to being able to view those transactions on a daily basis to know if there's something occurring that you don't want to catch it, a quarter later. You want to be able to catch it today and now and know what's going on so you can fix it before it becomes a major problem. Marketing has become a very essential thing. We spend a lot of money on marketing for our campgrounds. You got to make sure that you're seen and in people's faces. People are thinking about going camping. You want to make sure they remember, oh yeah, Beyonder, I saw their ad. Let's go check them out. So marketing is very essential to maintain and grow the business in your general area of any campground.
Perfect. Thank you for covering all that, Don. And Don, I just want to highlight a couple of things you mentioned in there too, that, we're really future focused. As Don mentioned, the advent of EVs and really those starting to take market share. It's something that may be 10, 20 years before it's commonplace in our campgrounds, but it also could happen sooner. At this point, all three of the big, American motor manufacturers, Ford, GM, Chrysler, have electric pickups. They might not have a lot of range now, but give it a couple of years, they certainly will. And as Don mentioned, it's certainly one of the big things we're looking at is the fact that when somebody pulls into one of our campgrounds with a depleted EV pickup truck and a big RV behind them, they're going to use more power in a night than the average user uses in a whole week. So, one of the technologies we saw as, pivotal early on was having wireless electric metering. So, that's something that we're actually in the process of getting online in all of our campgrounds now. It's already online in a few of them, just so we can hold people accountable for the electricity they use and make sure that we're recapturing all of our expenses. That's going to be critical for us, and anybody who's not doing it in the near future is going to be hurting if they don't have a plan for that high demand on electricity. So, as a company, if you're investing with Beyonder, there are a few paths we're looking at. We're looking for not just transactional investments with folks. We're looking to build long-term relationships and to be your partner in wealth building. We've got a few avenues, of course, that we are working on in growing the company, in growing the opportunities available. The very first is, of course, cash flow acquisitions. And that has primarily been our business model to this point. And what I mean by cash flow acquisitions is a property that's already cash flowing today, that we're buying an existing business, we're operating it, we're improving it, maybe expanding it, but we are getting close to breaking into some new horizons. One of those being brand new, what we call greenfield development, building our own RV resorts from the ground up. We actually have one opportunity that we're going to be unveiling here in the next 30 to 60 days, provided it moves forward, that is a brand new development opportunity. A very different model and offering, so obviously different return profile depending on the investor, but we'll certainly have more on that in the future, which is why it's imperative to be in our investor portal at investors.beyondercamp.com. And then, of course, strategic partnerships. There are a lot of opportunities we're looking at to partner with other folks in the business. We were recently approached by an outdoor recreation brand that wants to partner with us. We're looking, of course, expanding our management model, which of course benefits the brand. The more that Beyonder becomes a household name, the more recognizable our campgrounds we own are. So we're focused on strategic growth of the brand of the company. All for the benefit, of course, any investors who come along with us on this journey. So we're excited to have you with us. I'd like to take a quick minute, of course, to introduce you to everybody on the team, even those who couldn't be with us tonight. So first, I want to start off, of course, sharing a little bit more about myself and my partner, Justin Hoggett. I think it's important to understand who you're partnering with when you go into business, but we both came into this space with a breadth of background knowledge, in real estate. I always like to say Justin was a couple steps ahead of me when we met. He was a big-time multifamily investor, big single-family portfolio as well too. I had a great-sized single-family portfolio getting into this, but definitely a mind for sales. I came from Keller Williams Realty, which was a great springboard into sales for me in building a model that we were able to use for, of course, bolstering our acquisitions. Compared to other operators in the space, we are getting in front of better deals than almost all the rest of them, because most of them are relying on brokers to bring them deals. We're finding opportunities that didn't even know they were ready to sell when they picked up the phone that day. So that's something that I'm really proud and I hang my hat on. We brought our knowledge together, but we couldn't do it alone. Certainly we started that way, but we of course have since built a really fantastic team of members who have come along with us, who bring their individual strengths in to bringing us great deals, putting together the best offerings we can, making sure that once we get a property operating, that we're moving forward on our capital improvements plan. And of course, servicing our fantastic investors who come along with us. So it takes a village, and we've got, I think we've got a great little village of folks here to serve you, should you come along on this journey with us. Some of the things that we're focused on, like I said, I just want to reiterate some of the high level numbers again. As Don mentioned, we're targeting about that 40% operating profit or 35 to 45% EBITDA. We're looking at properties that are yielding, 15 to 22% cash on cash, over their lifespan. And then of course, we've got some great opportunities, as we get into this, that are unusual in commercial real estate to get seller financing. In fact, this is becoming more prevalent nowadays as well too, which just, really speeds along the acquisitions process and sometimes gives us unique leverage as we get into the space. But one of the biggest benefits that we offer that really keeps up with some of the big boys in the commercial real estate space is depreciation. Don has been our ringleader in the cost segregation studies on our properties and the depreciation available to our investors. So Don, do you mind sharing just some of our stats on how our properties have performed coming out of their cost seg studies?
Yeah, sure. It's been quite surprising, to be honest. As I myself got involved in this space about 2 years ago, some of the very first questions that I get asked from investors is how much depreciation is there, and I was like, I don't know. I told them I didn't say don't expect much, as most people thought. Is you're probably thinking today yourself that it's mostly land. What's there to depreciate? But it turns out when you do those cost segregation studies, a big portion typically of the properties fall into those accelerated depreciation categories. All the roads, the infrastructure, those utility pedestals, etc. Those all fall in that category that gets the bonus depreciation, all moved up to year one. So therefore, a big bulk of the purchase price typically falls in that category versus say a multifamily where it's mostly the building, which stays in that 27.5 year. So yeah, we did I love to share this one just because it was such a high number, definitely higher than any of us would have expected. But the property we closed on last December, the Cajun Moon, which is the first one that's in the Outdoor Hospitality Sun Fund, on the investor K1s. So what get back to you to give to your CPA. It actually came back with over a 222% depreciation. That's just in almost insane and unheard of amount that you don't see just anywhere. Obviously, I would not say don't expect that on every type of property, but just to show you those numbers are possible. It's quite incredible. I'd say on average though, per property, you're probably still looking at 60 to 90% depreciation on the property itself, and then from there, comes down to the investor level, the K1s, that could be even higher than that. But yeah, it's quite insane when you look at what is possible in this space.
Yeah, past performance, of course, not an indicator of future expectations, right, Don? But
exactly.
Certainly Cajun Moon had a lot of concrete and a lot more infrastructure in place than the average, but still, even our average campground, as Don mentioned, about that 60 to 75% depreciation, which is absolutely tremendous. Certainly helped at tax time. And of course, as we approach the end of this calendar year, and we're targeting we of course have closed a property into the fund this year that is going to be seeing depreciation by the end of the year. Cost seg studies in progress, and we target to close one more into it this year. We should have more opportunities available as the year finishes. So I want to take a few minutes to discuss specifically the Outdoor Hospitality Sun Fund, how it's structured, what we're targeting with the fund, since that is the current opportunity, and then leave a couple minutes at the end for any high-level questions that might come up today. So the Outdoor Hospitality Sun Fund was launched about a year ago today. Well, I should say about 11 months ago. We had a target close of November 14th of this year. We have made the decision, and of course, in accordance with our PPM on the fund, to extend this through the end of the year. We had some demand from some investors who said they had deals, of course, that were going to be finishing up in November, and they wanted to reinvest their funds after those exited. So we've made the decision. We're going to hold it open a little longer than we expected through the end of the year. We want to make sure that we give people who are doing their tax planning for next year an opportunity to place some investments in. The mission of the fund, of course, was to target up to $25 million in equity that we were using to leverage along with debt to purchase, potentially up to $80 million of RV destinations. It's hard to say if we're going to hit that number. I don't think that's going to be quite the case, but nevertheless, because we're going to be buying properties with the equity that comes in, the proportions are still going to be great as we expect anyhow. But I want to share the two properties that are currently in the fund. As we've discussed, Beyond a Resort Cajun Moon, 134 RV sites. It's got a 35-unit motel, 2 swimming pools. One is an adult-only pool. One's a family pool. This is a very high-performing property, very beautiful property, great amenity package. This is the one I mentioned, of course, that's just outside of Lake Charles, Louisiana. That we currently have an option on a parcel of land to expand into. We have high enough occupancy to justify it. As you can just see from this picture here, there were very few empty sites that day that picture was taken, and this is, fairly the norm around that property. Then, of course, the second property that we've been discussing is the Wheeler Lake property. This is the one that's just outside of Huntsville, Alabama. It's on Wheeler Lake, which is part of the Tennessee River. This one burgeoning with opportunity. I'm very excited about this one and the expansion ahead. We are still currently raising into the fund for the expansion on this property, but at time of acquisition, 76 RV sites, 5 deluxe cabins, 10 tent sites, a really great amenity package. So as I mentioned earlier, every KOA was a little different. This property used to be a KOA, and this was a KOA owner that really took the amenities seriously and gave some consideration to putting fun stuff in. They have a beautiful rope park up in the trees. They've got, horse stables where they do horseback rides. They've got gem mining for the kids, boat and jet ski rental, really neat stuff on the property, and a huge piece of land with almost a mile of shorefront that's available to it, where we can expand and add more sites. This was an unusual opportunity in that the occupancy on this campground was more than double what we normally expect a campground of this size to have, and is absolutely burgeoning with demand to expand. So as we work on completing that fundraise for the expansion, we're going to be looking at adding another 100 RV sites to this property, adding 30 slips out under the water to get started, adding a food and beverage facility, amongst other things. But of course, we got more details on that in the investor portal at investors.beyondercamp.com. And of course, we've got new opportunities that are going to be coming up here soon. As we close the fundraise on the fund, we're going to be spending a period of time after we're deploying that capital. So like I mentioned, we are looking to complete that expansion on the Wheeler Lake property. We're looking to bring at least one more property into the fund this year. So of course, we'll have more to come on that. And your opportunity to see those is in the portal. Just to share some high-level numbers on the way the fund is structured. So this is what we call a blind pool fund. You're buying into a fund that doesn't yet own all the properties it's going to have. It does have 2 properties in it now, so it's not completely blind, I suppose, but whatever we buy next is going to fit in a certain buy box for us. And that buy box for us is something that has the ability to pay a pref in year 1 at a minimum, is what we're targeting. Has the potential to achieve 15% cash on cash, and has the ability to fit into our normal model of allowing for expansion and improvement as we go. Our fund ownership structure, by the way, this opportunity is only available to accredited investors. We will have non-accredited opportunities coming up in the coming calendar year, but this is currently only for accredited investors. It's a 65-35 ownership structure. We do have 3 share classes that are dependent on how much capital you bring in. If you bring in the minimum, which is $100,000, that earns you an 8% pref. Of course, 100 to 250 is a 9%, and anything above, anything. Sorry. 100 to 250. My mistake on that. 100 to 250 is a Class C, 8%. 250 to 499 is a Class B at 9%. Anything above 500 and above is a 10% pref. We do assess for quarterly distributions. We do those 45 days after the close of a quarter. So for example, we are less than 30 days away from distributing for quarter 3, and we'll be evaluating quarter 4 in January for February 15th distributions on that. Of course, we assess our fees as properties are acquired. So this is not an entry fee fund. So if we don't purchase a property, and if we had to, let's say, return any capital, there would not be fees assessed to it. And of course, the fees scale on the size of the deal, which is why our acquisition fee has a range to it. However, our property management is heavily discounted on what we would charge outside property owners for Beyonder Camp to manage them. Just to give you an idea, Beyonder Camp would traditionally charge 12% to a property manager. We do discount that for properties that are in the fund and in the holdings. So anyway, more details, of course, on the fund and its structure can be found in the portal. We'd love to have you join us, like I said, investors.beyondercamp.com on our journey to 100 properties. So with that is all of the content we had planned for this evening. I would like to open up the floor for any questions that anybody has. So if you have questions that you'd like to put in the chat, you can do that. If you have questions you'd like to come off mute for, we can take one at a time, and we might have time for a few questions here this evening.
I may have missed it. What is the range of investments? What's the threshold?
Yes, ma'am.
Okay.
So the minimum investment for the fund is $100,000, and that gets you a Class C share up to $250,000. Class B share starts at $250 and goes up to $500, and then anything above $500 is a Class A share.
And just to add to that, if let's say today you have $100,000 to invest today, but maybe in a month you've got a property that's going to close, you're going to have another $150,000. You can add to that. You can level up your shares and bring all of your shares up to that next class level.
That's a great point, Don. Thank you for mentioning that. Yes. So if you've already invested, for example, or if you invest now and you invest a little more later, we will level up all shares together, not just the portion over, that threshold. And the other thing that's important to mention too is we designed this to operate like a ratchet. We will only take your share class up and not down. So in the event we have an early liquidation return of capital event that returns part of your capital, we will not reduce your share class. You will maintain the share class you're at. So if you elevate it to a class B share, you will remain a class B share until liquidation.
Awesome. And do you accept fund investments?
Yes, we do. We do partner with fund of funds. Absolutely. Alicia, do you administer a fund of funds yourself?
I have not, but I'm a part of a fund, and I like this asset class. I also really like Don, so I want to invest with you.
I was just going to say, if you didn't already know Don, I was going to ask that you give Don your contact info so you can connect.
Yes,
Yeah,
absolutely.
we know each other. Yeah, thanks, Alicia.
Thank you.
Outstanding. Any other questions we have?
Hey, Adam, it's Ting Ting here. Thanks for the
Hey, Ting Ting, how are you?
Good, how are you?
Great.
We've got a couple of investors who are currently in the fund already. Can you touch base on our performance on the current Cajun Moon investment, just for the investors, and also expectation for Q3 and Q4 payout?
Absolutely. So I can't speak to the expectations on the payouts yet. Rick is still closing the quarter out, so I don't have those financials yet. However, past performance on it. So we started off strong in this property. We came out swinging. Now, mind you, the seasonality in the campground space is inverted in the southern states. So when we bought the property in December, we bought it in its peak, and we had a really incredible Q1. As we started the year off, wrapping up the peak season for the property. So it did see its expected seasonal shift going into summertime. So of course, not the same performance in the wintertime. It is hot and muggy in Louisiana in June, July, August. However, we're already starting to see the numbers tick up. And of course, we're expecting that moving into Q4, Q1 this year, which is of course going to be the stronger quarters for that property, that we're going to see similar performance to last year, which again did exceed expectations to the point that we gave a higher than usual distribution from quarter one. We tempered it back to our average distribution in the summertime, just given some expectation that it was ticking back up, but also given some overrun from the first quarter of the year. As far as the Wheeler property in the fund, it's performing well. It's too early for me to say, like I said, just because we haven't even owned it for a full quarter yet to know what that distribution potential looks like on the property. We do typically only distribute after a full quarter of ownership. But again, we have made exceptions in the past. So like I said, some of this will come in the next couple of weeks as we prepare for our distributions.
Sounds good. Thanks.
Of course. Absolutely. All right. Any additional questions we had?
Adam, you said that any investment coming in right now into the fund will go directly to properties that are already in that fund, right? There's something where you said some people exited, so there's some opening or gaps in there. So it's not something that will be directly going into upcoming properties.
That's a good question. So an investment coming in now is an investment for ownership in the Outdoor Hospitality Center Fund and its assets. So if you're buying in today, is buying into the assets that are already in it and new properties going forward. So they aren't actually in the individual property. Those properties are all entirely owned by the fund, and then you would have a percentage of the fund. Does that make sense?
Yeah.
And Shirish, just to add to it, the funds that might be collecting can also be used for capital expansion. So like, say for Wheeler Lake, they're going to expand on phase 1, which might be used for that purposes also. So it's an ongoing investment.
Okay. So
nobody exited or anything. We just have acquired 2 properties in the fund, and on both cases, and obviously in Cajun Moon, there's not a lot of expansion, so that's why we're focusing on acquiring the land next to us. But in Wheeler Lake, there is a potential for phase 1, and also there are plans for phase 2 as well. So, but phase 1 will be definitely part of the fund.
Okay. So if all the properties are performing the same, so the fund basically averages that out. So the fund return is the same as the total of average of all the properties in it.
It's
The
not
main
sorry, go ahead, Ramesh.
No, actually, the main purpose for the fund is to acquire properties in different locations so that it evens out the local issues or weather patterns or seasonalities and all those factors, right? So it'll average out overall, but the goal is to maximize the returns by doing so.
Okay. Okay.
That's actually something I forgot to mention, so I appreciate you bringing that up, is the diversification that the fund brings. As opposed to being in a single property net, we now have multiple properties. So if a natural disaster hit an area, or if we had some sort of an external factor that affected one property, we still have the other properties to lean on until that one gets back up on its feet.
Okay.
So good question.
So the timeline is pretty much open then.
It is open for now. We are required to close the fund. Like I said, we do have the ability to extend it a little bit. And because of the demand we had from a few of our investors, we did make that decision to extend through the end of the year. Once this fund closes, the properties that are in it and the capital that's in it once deployed is going to be locked in. The ownership percentages will be locked in place. Any excess capital that isn't deployed at that time will be returned back to investors, but it's, to make sure that we aren't diluted. That will be after the start of the year. We're going to be focused back on single property syndications, but for the time being, we do have the ability to potentially add one, even possibly two more properties into this fund.
Okay. Okay. Thanks.
Yeah, the opportunity is open till the end of the year. I'm sorry.
Exactly. Yeah, I'll add too. Don't wait. I mean, if you invest today, you still are participating now in this Q4 distribution. You'll get prorated for the time that you were in Q4 for that distribution coming out at the beginning of next year. So don't want to wait until December 30th to put in your investment, and have to wait then until Q2 to get a distribution. Invest today, tomorrow, as soon as you can. We do accept also self-directed accounts. So if you got SDIRA or 401k, whatever you got, EQRP. All those are accepted as well. So if you got the money, looking for a place to invest to get great cash flows, great depreciation, and a property you can actually go to and have fun with, enjoy it, then yeah, we're definitely welcome to you to bring into your investment funds.
Yep,
Okay.
that's a great point. That's the other hidden benefit we forgot to mention tonight, of course, is the ability to use your assets. All right. Probably have time for one last question, if anybody has one, before we wrap up.
Hey, Adam, I have one more question.
Yes,
are we still planning on increase the share price before the fund closes, like what we anticipated back then?
We have not. So once we get the Q3 data back from Rick, we will make a decision as to whether we're going to increase the share price for the remainder of the fund's hold period. So that will be announced. We'll announce that at the time we release the Q3 reports. It's going to be based upon the financials from the quarter.
Okay, sounds good.
Yep. Good question. All right.
I just want to highlight one of our investors, Nicholas Bovin. He attested that he invested with his SDIRA, and it's been a great process for him. So just want to share that.
Well, thank you for that, Nicholas. We really love hearing that feedback. I will mention that we're going to make that process even smoother as we're transitioning over to a brand new investor portal here soon that's going to expedite the process. So anybody who jumps in today is going to be into our old portal. But you will be migrated over to the new one if you sign up now. But yeah, we're going to make that process even better here soon. So more to come on that. I want to be respectful of everyone's time as we near the top of the hour, and thank you for coming out this evening. If you joined late, don't worry. I will be sending out the recording tomorrow. So thank you so much for coming out tonight. If you have any questions that went unanswered, please reach out to Don and Ramesh. Bring your questions to them. They're a wealth of knowledge, wealth of experience, and they'd love to help you on your journey. So we appreciate your trust. We appreciate your time. So thank you so much.
Yeah, that's also contact Ting Ting for a few issues there as well.
And Ting Ting too. I'm so sorry, Ting Ting, for excluding you on that. Yes, but yeah, Ting Ting, Don, and Ramesh are your resource. Of course, sign up in the portal, investors.beyondercamp.com. If someone did refer you there, you'll have a chance when you sign up to mention who referred you. So please be sure to mention them so we can connect you with them once you've signed up. Thank you, everybody.
Thanks, everyone. Have a good night.
Thank you.
Good night.
you.